Good evening, everyone. Welcome to the webinar. We're going to talk about the WeeklyMAX product. WeeklyMAX is the newest product. In fact, it's launching today. This product is all about taking advantage of weekly options in an intelligent way. So, that's the key there. We have to take advantage of them in a smart way because as we know, many people may have traded weekly options already. For those of you who've been trading weekly options, you know that there are risks and rewards that go hand in hand. And for those who have not traded weekly options, these are pretty exciting instruments, but we do have to take advantage of them in a smart way, and that's the real key. And so we'll be looking at how we do that in this product. So on this webinar, I want to give an overview of what this product is all about and how what are the things you can expect to find in that. A quick note, if you have any questions during the presentation, please type it into the question box and I will answer all questions at the end. But the presentation itself may be about 20 minutes, 25 minutes. So we'll have all the time we need for Q&A. Okay, so let's get started. My name is Hari Swaminathan. I'm the founder of OptionTiger.com. Option Tiger is about 2 years old. We are based in the Washington, D.C. area, but I've been an options trader for about 8 or 9 years now. And most of what I've learned about options is through making mistakes, through trying a lot of things, experimenting. And so, needless to say, the first couple of years, the all those mistakes are costly. They are expensive. You do learn, of course, from your mistakes. However, the one thing that you have to watch for, especially when you're starting out with options, is that you not lose too much money while you're learning. So optiontiger.com, let me just give a brief background about optiontiger.com. This is our website. Option Tiger has some very cutting edge education, options education. We have some proprietary systems. The proprietary systems are basically designed to give the trader an edge. See, at the end of the day, what you really need is some kind of an edge, on the options market, because we are dealing with market makers, we are dealing with professionals. They are obviously very strong option traders, and the way the options market is structured, they have a natural edge because it's just like a casino. When you go into a casino, the casino has an edge, and our challenge is how do we overcome that edge. Unfortunately, in a casino, there's really not much you can do. You can be a skilled player, a card player, but then most casino games are games of chance. And so there's really not much you can do there. However, options are different. Options are a game of skill, and it's no different from chess. So if you have the skill, you can overcome, you can put a certain edge onto your side. And so all of Option Tiger's proprietary systems are all designed to give you an edge. No system can be 100% perfect. No system can be 100% systematic, especially in the options market, because there are so many variables that go into an options trade. However, what you want is some kind of an edge. And if you can get a big edge onto your side, that by itself is a major achievement. So all of these products, of course, the WeeklyMAX is the newest product. We're going to talk about that on this webinar. However, Option Tiger also has products for day trading. The Condor Max is very sophisticated intellectual property. You have an Income Max, straddles, and the spread system, which are more simpler in nature and also applicable to smaller accounts. Swing Trade Max is a product that is again chart based and indicator based, where you can take a trade for a few days to a few weeks. Again, all you're looking for is an edge, and all of these systems give you that edge. And you have Earnings Max, which is a set of trades, a complete playbook of trades for every earnings season. And then there is a lot of free stuff. There's a whole bunch of on-demand webinars that you can look at. And of course, please feel free to visit our free courses section. There's all kinds of courses here for free. dealing with each individual topic. These are all courses, I'd call them mini courses, anywhere from 8 to 15 minutes long, but they take one topic and they drill down deep. So, there's a lot of stuff here that you can look at. All right, so let's get back to our presentation. So, my name is Hari Swaminathan, and I have a bachelor's degree in engineering from India and an MBA from Columbia Business School in New York. So, weekly options started about 4 or 5 years ago, and it's only in the last 2 or 3 years that they've really started picking up steam. I don't think the CBOE did a pretty good job of marketing them in the first couple of years. However, in the last 2 to 3 years, the weekly options have really become very popular, and we're going to look at the next slide, which shows you and will give you a clear idea of what we are talking about here. There is massive volumes, massive open interest. And obviously, whenever you have massive volume and open interest, it's always going to benefit us traders because you're going to see lower bid ask spreads. And even on some of these larger indices, you'll see that the bid ask spread has been reduced by almost 60-70%. So quite a bit of advantage for us options traders when it comes to the bid ask spreads. There's now weeklies on over 100 stocks and ETFs, maybe even much more than that. I know at least 100 of them have. And then more recently, I believe last year, they also started this new thing called the shorties. Now, shorties is not an official name. It's just, I think, in the options market, it's sort of like a nickname. But we do have shorties on about 50 stocks and ETFs. And what we mean by that is, if we go take a look at Apple options, for example, right here, you have the first weekly, which expires in 5 days. So when weekly started, these things, this was the only weekly available. However, now you can see, and of course, the August, which expires in 12 days, is the regular monthly series. And then you also have weeklies which expire in 19 days, which expire in 26 days. So these things are called the shorties. And generally, you'll see it, if the monthly series is about a month away, you'll see that you'll have 2 or 3 weeklies in front of that. And those are called the shorties. Now, not all stocks have shorties, but a lot of the stocks that have weeklies also have shorties. So now this gives traders tremendous flexibility here, because previously, whenever we used to think of an income strategy, we had to go over to a month, and you had to create what you called a monthly income strategy. However, now with the weeklies, the shorties, you have the ability to be very creative, because you can use combinations of the front week, the next week, the week after that, and then the monthlies. You can use a wide variety of combinations to create a good income strategy. Now, again, if you're going to explore and experiment, you got to do it with very small sizes or even paper money, because these instruments are especially the weeklies, the front weeklies, and the next shorty. Their behavior is going to be a lot more intense than what you're used to. So we'll jump into all of that as we go along. But this is a brief history of what weekly options are. Now, this graph really gives you the picture of how popular weeklies have become. So this is a picture from the CBOE website. You can see here, the graph starts around June 2010, and in terms of average daily volume, this is probably about 20,000 contracts. The contracts are on this side of the y-axis, on the left side. On the right side, it tells you as a percentage of all SPX options, what percentage are the weeklies? And here you can see it's barely 2%, 2% in June 2010. However, fast forward to about June 2014, And here we're looking at almost 30 to 35% of all the volume of SPX options are weekly options. And in terms of average daily volume, it's 250,000 contracts. This is pretty massive because we're talking about the large SPX weekly options. So let's go take a look at that. If we, it's obviously a large index, and if you see the options on the SPX itself, what you can notice is the um, if you can see the open interest and the volume, I mean, they're running into thousands. They're literally running into thousands. So this is great. It's great volume, and you'll see now. Of course, if you look at the bid-ask spread, we are after hours, so the bid-ask spread is much wider. Here you see the 1280 and 1350. However, once the market opens tomorrow, you'll notice that the bid-ask spread is sometimes 20 cents, 30 cents. And that's very, very good for the SPX. It's a very large index. And if you just have, if you were to go into the monthlies, let's go into the September. And if you see the bid ask spread here, you can see it's like over $1 in most cases. Again, bid ask spread coming down is very good for us traders. It just means that we pay less in slippage whenever we get in and get out of trades. And the volume also on the weekly options. Let's just take any stock, and if you look at Apple, the monthlies. That's pretty good open interest, obviously, but of course that's the monthlies. But if you take a look at the weeklies on Apple, it's fantastic. I mean, and you just check this out. Even the weeklies have volume and open interest in the tens of thousands. So very good volume, very good open interest. More and more traders are gravitating towards these weekly options. They are very attractive for many reasons. So we'll look at all the pluses and minuses, but certainly weeklies are here to stay, and they're only getting more and more popular. So it's very important to understand how we can add these weekly options to our trading arsenal and do it in a smart way. And that's key because they do have risks, and we'll talk about that. So, just a brief overview of the WeeklyMAX product itself. Um, Once you get into the product, you're going to, of course, have a complete overview of what the weeklies are and the shorties are. There's a detailed study of all the Greeks. Now, this is probably the most important because um, up until, if you look at an options life, right from when the option starts, perhaps months in advance, and all the way down to the final month, their behavior is very stable, it's predictable, and it follows a certain pattern. However, once we enter the final 3 weeks, 2 weeks, in fact, the final 2 weeks, all the Greeks are going to get much more intense. In fact, 3 out of the 4 are absolutely out of control. And, one of them, Vega, is somewhat subdued. But the other three go into overdrive. And so it's very critical to have, first of all, a detailed understanding of how all 4 of these Greeks work when it comes to the final 15 days, the final 2 weeks. And whether the option is in the money, at the money, or out of the money, they all behave differently, and so you need to understand in a very detailed sense how these Greeks are, because these Greeks are going to be moving rapidly, very rapidly. And so if you don't have an understanding, your options position, whether it's your profit or your loss, is going to move at such a speed that you'll be left wondering what is going on. And so that's not good, because you need to understand your positions, and you'll only get a good understanding if you know how all 4 of the Greeks work during the final 15 days. So that part of the analysis is part of the WeeklyMAX product itself. And then, what types of trades are good for weeklies? What time frames are good? How do you pick the right options? How do you pick the strike prices? Of course, the weekend time decay is very attractive. There's no question about that. We get 2.5 days of weekend time decay. But how do you really, how can we really take advantage of that? What kind of approaches do we need to take to that can fully maximize the weekend time decay? What are the factors that you have to consider for each of these trades that we may put on weekly options? And of course, no trading can be complete without a thorough study on how you would manage the risk of every trade, how you would make the adjustments, when do you make the adjustments, and of course, we'll be covering some low risk but high reward trades. Because remember, when it comes down to the weeklies, option prices are low, so there are very many specific situations where you can take some low risk, high reward trades. So let's first, before we jump into some of the other stuff, we look at the risks and rewards of weekly options in general. The pluses obviously are now we are able to create a weekly income plan. So previously, like I said, we had to think of a monthly income plan because these weeklies were not around. But now that they are, we can think of creating a weekly income plan. However, that requires a complete change in approach, because what was good for a monthly income plan is not going to be good for a weekly income plan. However, the pluses are that you can probably create more income from a weekly income plan just because you can repeat it 4 times a week. So, if you were shooting for, let's say, I don't know, 5% a month on a monthly income plan, or 6%, you can do a little bit better than that, because on a weekly basis, you now only have to do about 1.5%, or, 1.75%. So it's very possible to do that 3 or 4 times and do better than your weekly income plan. So it's sort of like compounding. You obviously, the moment you start compounding, you can get better performance. You also have shorter time frames for your trade to play out. So previously, you'd put an iron condor or whatever for 1 month, and you would be sitting on that trade day after day, waiting for it, that theta decay to come out of the trade, and perhaps the first few days or even a week or two, that theta decay is just not happening. And so and then meanwhile, some geopolitical event or something happens around the world, and then the markets go for a toss, and so it kills your entire trading plan. Whereas in the weekly income plan, you obviously have much less time, and you can structure your trade. You can, within that shorter time frame, it's many times it's more easier for the trade to play out in your favor. Of course, that also has a flip side, but it's definitely a positive that you have a shorter time frame for your trade to play out, and that's great. And of course, we all know that in the final few days, a week, 2 weeks, the time decay is rampant. So, that's something that we have to take advantage of. It's one of the best characteristics of weekly options is that time decay is rampant. And so we want to take advantage of that. Now, what are the minuses? The minuses are that the weekly options move very quickly. So, especially when we are going after time decay, which means we are short gamma. So, we are short gamma, and short gamma trades can hurt because option prices move very quickly. The Greeks move very quickly. Delta, gamma, and theta become very intense. And so your short gamma trades can hurt. And therefore, obviously, because there's little, time left, you have to have a more active approach to trading. So your decision making has to be faster. What you need to do, you have to be prepared in your mind as to what you're going to do. The only question is, when are you going to pull the trigger? So you have to be very clear in your trading plan. And so that's part of what the WeeklyMAX product is all about. So for each kind of trade, we look at what is the initial trade structure? What are the breaking points? What are the risk points? What do we need to do if it comes there? We need to have a clear approach. We need to have some clear actions that we are going to take. The only decision is when do we pull the trigger. So, but anyway, so those are the pluses and minuses. The big the one thing I do, with rampant time decay, you also have the problem is the if you wait too long in your trade cycle, then your gamma becomes very, very high. So for example, just like if you take a look at what we're looking at is Apple right here. So let's go take a look at the gamma on these weeklies which have 5 days to expiry. So you can see the gamma of these at the money options are 0.14, very, very high. And we are still only 5 days away. As we come closer, this gamma is going to become even larger. So which means for 1 point move on Apple, your deltas are going to move by 0.14, which is pretty significant. So there's a lot of movement going on as you approach expiry. So these are the things that we have to watch out for. So the in general, weekly options need to be approached from a strategy standpoint. So basically, what I mean is, technical indicators can be helpful as to okay when you might enter, when you might exit, things like that, support, resistance, moving averages. However, weekly options are more of a probability game. It's more of a mathematical game rather than a technical pattern game. However, there is one indicator that is, I believe, very, very helpful when you think of trading weekly options. Understanding this indicator will provide you the right framework to approach all your weekly option trades. It doesn't matter if it's a debit trade or a credit trade. The way to think about weekly options, this one particular indicator will really help thinking about weekly options. And so, that's one indicator that is covered in detail, and we refer to it on all the trades in the product itself. Um, the the good thing is the entire range of option strategies are available to us when we talk of weekly options, where we can do long call, simple long calls and long puts. We can do debit spreads. So these are basically going to be your directional trades. However, you do want to make sure that that the time decay is acceptable to you, and your trade outlook has to play out within that time. So you want to be careful of that. But certainly directional trades are very can be very powerful. And anytime you do long calls or long puts, you can always do a debit spread, the bull call spread or the bear put spread. It goes without saying. So a debit spread, it just reduces your cost and your risk. But really, where some of the more important strategies come into play is when we talk of time decay. So we are talking about credit spreads, we are talking about iron condors, and you also have the time spreads, the calendars, the double calendars, diagonals, double diagonals. You also have the butterflies, which is discussed in the product. The butterfly, the negative of a butterfly is it doesn't give you too much of a range for the stock to move. So your range is very small before the trade gets into trouble. So although we cover butterflies in the product, we generally don't want to take a butterfly trade. However, the good thing about the butterfly is that almost all the time decay comes in the final week. So there's a lot of time decay happening there. The problem is the range of the butterfly is more narrow, whereas with iron condors, calendars, double calendars, diagonals, and double diagonals, you have a lot more room to play. Your time decay is great, and it's got a lot of other good features as well. So these are all the trade types that we are going to be covering inside the product, and each one of these trades is discussed in detail, in the product itself. And of course, no trading system, nothing, no systematic approach can be true, or rather can be, fully perfect or complete without looking at how you would manage the risk on your trades. So even before we put a weekly options trade, there are three key parameters to look for. And you need to look at these, get a check mark on all three of those factors before you take the trade, because understanding these three parameters is important for any weekly options trade. And then this is a very important point. You have to strike the right balance between time decay and prime price movement. We know that time decay is generally going to be working in our favor if you're talking about all the time decay strategies, and price movement conversely is working against us. So most of the time when we talk of time decay strategies, we would love for the stock to do nothing, just stay right there where it is and do nothing. However, in reality, the stock is going to move. And so when the stock moves, there is a need to either adjust it or do something to it. So, but you do that adjustment too early, you're leaving. You're probably going to leave money on the table. If you do it too late, you're outright going to take a loss. So, what is that right balance? Because each passing day you're collecting time decay. So when do you do it? So that's a very it's a fine line that we have to walk there, to strike the right balance between collecting on time decay and at the same time managing the risk of price movement. So that aspect is covered in detail in the product as well. And then, of course, for each trade type, you have various adjustments possible. What should be the timing of those adjustments? And so you want to be prepared. You shouldn't have to come to a point where you're thinking about what to do. That should not be there at all. You always need to be fully cognizant of what you need to do. It's just a matter of timing. It's just a matter of when do you do it. So to pull that trigger is important. So there's some guidelines on that as well. Of course, options being what they are, you can't completely have a black box type system. There is a bit of subjectivity involved. There is a bit of experience in trading options itself. The skill level of trading options, that's also comes into play. And especially with weekly options, because you have much less time, that critical element of decision making comes into play. So now inside the product, we have different live trades. We have a long options trade. We have iron condors. And when you do iron condors, basically the same approaches can be taken for credit spreads as well. We also show a double calendar and a double diagonal. So these are all the live trades that you're going to see, and how some of these trades, can go through adjustments. What would be the adjustments? How would you tackle some movement? All of that stuff. So critical is one of the things is timing of these trades. Okay, when do you put the trades? When do you take it off? What is the ideal time? How do we manage the risk of weekly options, the risk of big movement against the collection of time decay? So these are, that is a common theme across all time decay strategies, and you have to keep that in mind, because this is not a monthly trade. If very often on a trade that has many days, perhaps a few weeks to a month, we are able to sit back and handle an adverse move, and because there's more time left, there's things that we can do. The profit and loss also doesn't move that quickly because of all the time that's remaining in the options. However, with weekly options, that's not the case. You have to be a little more careful. You have to be a little more active, and you have to be decisive. And so that's very critical. So these elements are covered in all of the live trades that are included in the product itself. Now, as I mentioned, WeeklyMAX is launching today, August 3rd. Product is ready. It's fully ready now. So you can take advantage of the launch special. So generally the launch special is going to be the lowest price you'll see on this product. It is $249, which is 50% off the regular price of $497. The coupon code is weekly launch special. So basically, what you would do, come here and let's go back to if you can find it under proprietary systems and weekly max class. Here you would just put that coupon code, which is weekly launch special. I'll type it into the question box as well. That's the coupon code that will give you 50% off. Very good value for money. I think if you're going to be trading weekly options, this will provide a very strong foundational framework to operate, the weekly options, regardless of what kind of trades, because the kinds of trades don't change. Whatever trades that we can do on monthlies, we can do on weeklies also. The only thing is, when you talk of weeklies, things are a bit more intense. Not a bit more intense. I'm sorry, it's a lot more intense. So how do we manage that? And there are some specific things with the Greeks that change a lot. So you have to have that amount of knowledge, the theory behind it, as to, and of course you'll also see it on the live on the platform, as to how these Greeks are very, very active. So that's important. So that's it. It's a quite a short presentation. If you have any questions, please feel free to type it into the question box. I already see a few, but go ahead and type it into your question box. If you think of questions later, you can always email me at info@optiontiger.com. And we'll take it from there. So let's jump right into some questions here. All right. Okay, for the weekly options with only a few days to expiration, how effective are the adjustments? Adjustments can be very effective, George. Let me type it in here so you can see the question. Okay, so the adjustments can be effective, but adjustments by itself may not be may not be what to say, the complete picture. You have to have an approach, a trading plan for these trades. So most of the time, if you go with go with a solid plan, you'll see that the need to adjust probably going to be minimal. But of course, on any given day, the markets can move a lot, and if that's the case, then you have to do some adjustments. But they can be pretty effective. In these weekly options, they can be very effective. All right. Would you suggest this? Wayne says, would you suggest this strategy for someone with a full-time job who has limited time to check charts during the day? So first of all, it's not a chart-based system, Wayne. The only time you need to look at the chart is, if you want to enter the trade, or if you want to exit the trade, and perhaps you're looking for some clues as for, a good timing in terms of the charts. However, these weekly options in general, they are mathematical, they are probabilistic. So you need to, when you get into these trades, you're focusing more on the probabilities of things. Whether it's a debit trade or a credit trade, you're looking at the probabilities. And so, your approach is a little different when it comes to the weeklies. Now, having said that, your first part of the question is, would you suggest a strategy? Well, first of all, it's not one strategy. We're looking at all strategies in this product. I think your question would be, would you suggest weekly options for someone with a full-time job who has limited time to check the markets? If that was your question, I would say no. If you truly don't have time during the market hours, I would say stay away from weekly options. Stick to the monthlies, because you do need to be active. Things can make a move, and you'll need to take action. So when you're dealing in the final, 2 weeks, that is the issue. There is lots of reward at the same time, but the need to look at it is there, because if an adverse move comes along, you're going to the position will deteriorate um, to a level where it's difficult to come out of it either with a profit, or it's difficult to adjust your way. The problem is with these weekly options, if it deteriorates, if the position deteriorates to a point, then it's difficult to to doctor that. It's very difficult to doctor that. So you do have to be a little more active here. All right. Um, does this have, NP says, does this have live training trades, or it's just recorded webinars we go through? It's not a webinar. This is a set of videos that covers concept by concept of all the things that you have to look for. And of course, we have the live trades as well. Yeah, these trades go for 2, 3, 4 days, and they are recorded, and we take a look at all the different things that happen to these trades, and how we try to get out of them. When do we try to get in, when do we try to get out, things like that. Yeah. So those are the live trades. But before you get to the live trades, all the different concepts that go into understanding weekly options very clearly, those are all covered, and each concept is covered in a single video, and that's part of the course. How do we differentiate between weekly options and monthly option contracts? If both of them have 10 days to expire, both will not have 10 days to expire. You can have only one set of options that will have 10 days to expire, because on the Think or Swim platform, at least, the weeklies are shown in red and the monthly is shown in white. Now, you don't see a weekly, which is in red, that also have 12 days, because at that point, the monthly is acting as the weekly. So you will not have a monthly and a weekly that has the same number of days to expire. All right. Do all adjustments in general incur more risk exposure to the original position? Depends what you mean by risk. If you mean more capital, obviously, any adjustment, whether it's weeklies, monthlies, yearlies, it doesn't matter. Any adjustment will, in general, require more capital. But adjustments can reduce your risk exposure. Absolutely. So the whole point of adjustments is to reduce the risk exposure of the original position. So although you're investing more capital, you're probably reducing risk if your adjustment is right. So is the WeeklyMAX mainly a theta based, delta based, or vega based? There is no, vega is very subdued during the final couple of weeks. So the WeeklyMAX applies to many strategies. Some can be theta based, some can be delta based. The options we choose, the strike prices you choose, could be gamma based. So all of these concepts are covered. The WeeklyMAX is not one strategy. The WeeklyMAX is a set of approaches you take for weekly options, regardless of what strategy you are trading. So all the strategies are discussed. All the strategy, your long calls, long puts, debit spreads, credit spreads, iron condors, time spreads, calendars, diagonals, butterflies, all of them. So the entire gamut of option strategies are applicable for weeklies. But the question is, which one do you take? What are the, and there are some subtle pluses and minuses between each of them. So how do we, what are those? Because once you understand them, then you might find that one or two of these might be your favorite. And we all have favorites, and you'll see that in the videos, etc. You'll see that one particular strategy is my favorite, but the concepts apply to all of these strategies. So the WeeklyMAX is not one particular system. It's a complete approach to using weekly options in general, because the characteristics of weekly options are quite different from monthly options, because everything goes on overdrive when it comes to the final week or the final 2 weeks. Things get a little bit more active, and so that that kind of environment requires you to change your trading approach that we normally are used to in a monthly trading cycle. but the rewards are there. The If you think of debit trades, you could put a small amount of capital at risk, and you can get a very high reward. Even on a debit spread, it's very advantageous. These weekly options provide you some very specific advantages, and so especially if you're delta based, on that particular strategy, then it's fantastic, because you will see profits very, very quickly. So, all right. Let's see. Before you're done, could you? Yeah, coupon code. Yeah, yeah. Thanks for reminding me. Here you go. I believe it is weekly launch special. Let me just check. Yeah. Okay. So that's the coupon code. So once you get to the page, then yeah, you can just put in that weekly launch special. All right. Okay. Does the weekly max somehow overlap the condor max? When it comes to iron condors, you might see a little bit of an overlap, but really, the condor max is specifically deals with tactics that you can deploy for iron condors, whereas weekly max covers everything. It covers all the strategy. It covers all the. I mean, weekly there's obviously, whenever we talk of time decay, you're going to see some concepts that overlap, but in terms of the strategy itself, it's very different. Even when you're looking at iron condors from a weekly income standpoint, or if you're looking at the condor max, it's very different. There's really there's not much of overlap there. What is a realistic expectation in terms of percentage when it comes to weekly or monthly average income with reasonable practice? Good question. Good question. I think the answer lies in the final part of your question, which is with reasonable practice. I found that really, yeah, your returns, you can have a system. You can have a system that gives you an edge on a trade, and you can use that system. At the end of the day, how skilled are you in options trading itself? That becomes a pretty important question to answer. So because many times people get frozen, and I'm not trying to be critical. I used to be in that position, also in the first 2 or 3 years. When things are moving against you, you're like a deer in headlights. Okay, what am I supposed to do? And that, I think, is the biggest issue. Because even though I see that many people who have who have good systems to follow, good approaches, the question is how their decision making. Okay, when do you do the adjustment? What kind of an adjustment do you do? That becomes the real issue. So I would say, if you're at an expert level in trading options in general, I would say 5% a month is very is very achievable. You could do a little bit more, you could do a little bit less, but on average, I would say 5% per month, 7% per month is very achievable. And you could do better also. You could do on many months, you'll do better. So, but on a weekly basis, yeah, 2%, 2% is a good number to shoot for. The only thing with weekly options is, because you're turning the trade over 4 times, your transaction costs are going to be a little bit higher, obviously. So you want to factor that in. So you want to shoot for like 2.5, so that after figuring out for your transaction costs, it still makes meaningful sense, a meaningful amount of profit. But yeah, you can do 2.5, 3. It's very possible. Just need to do the risk management properly, and you can do that. And that's the great thing about the weekly options, that you're able to churn out a higher return, much more so than what you would do in a monthly income strategy. 4 times turning around a weekly option can produce a lot more return than the monthly. So definitely, that is an advantage. Can I use a calendar spread strategy for weekly options? Absolutely. And in fact, I'll tell you, you're going to see a lot of that inside the product. Um, that's actually one of my favorites. It's a very viable strategy, and you'll see the calendar and the diagonal being used in a particular way inside that even enhances your trade. So yes, definitely that's included. Yep, sure. When? Sorry, my connection got lost. Did you say there is overlap? Yes, this is being recorded for the second part of your question. Um, there is no, I wouldn't say there is overlap. The Condor Max is very specifically focused on iron condors because iron condors is a very popular strategy. There's no question about it, and it's a great strategy. However, it's got some negatives. So, how do you tackle those negatives of an iron condor and still be able to consistently produce a positive return? I mean, sometimes it could be 5%, sometimes it could be 8%, sometimes it could be 2%, or even a scratch trade, whatever the case might be. The important thing is you don't want to lose, you don't want to have a loss, because really that's the negative of the iron condor, is that when you lose, you tend to give up the profits that you made on three or four trades. So that's really what you're trying to avoid with the iron condor. So if you have a monthly income strategy for Condor Max and you do it 12 months a year, if on 10 months you come out positive and the other 2 months you break even, that is a fantastic record, I can tell you. Because most of the time, what will happen is you might win 8 or 9 times, 2 times you lose, which will completely negate about 4 or 5 months of profit. And the other one time you'll scratch out. Okay. But the performance is not consistent. So the Condor Max is focused on how you can produce a positive return. It could be low 1 month, it could be high. You can do up to 10%, 11%, 12%. At the same time, if it's a bad market month, then you want to reduce it. A great example is what happened this past week. How did iron condors do on Thursday? How did iron condors do on Thursday of this week? If I were to speculate on that, I would say 99% of iron condors got hammered on Thursday when the Nasdaq went down 85 points, S&P went down 40 points. I would say 99.9% of iron condors got eaten for breakfast that day. Okay. Whereas if you had had the Condor Max, you would have probably come out at break even. Okay, so that is a very good example of how the Condor Max intellectual property itself and the trade structure and all of that will help you come out, without, with a scratch maybe, but you won't get beaten up, because on a day like Thursday, I can tell you one Condor trade would have lost profits of 4 or 5 other trades. I mean, see, that is a massive market move that you can do very little about, because most of that move happened before the markets opened. The S&P opened, if I remember correctly, the Nasdaq opened about 30, 40 points down. So you don't even have a chance to adjust your position before the market opens. So how do you deal with that? So which means your trade should have had the right kind of structure the previous day itself. And so that is important. And that's what the Condor Max is all about. Why would we want to do weekly options for 5 to 10%? Let me read this again. Why would we want to do weekly options for 5 to 10% and put on risk 4 times a month than getting a similar return you doing a safer iron condor? I don't know what you mean by a safer iron condor, meaning a monthly iron condor. Um, the you will get more return for sure. Okay, you will get more return. The if you're making 5 to 10% on a monthly iron condor, you're probably going to do better with weekly options. And with weekly options, it's not just about iron condors. Okay, it's about everything. It's about long calls, long puts, debit spreads, credit spreads, time spreads. It's about everything. It's a weekly options require a different approach because the basic parameters change, which are the Greeks. Obviously, the Greeks change when it comes to the final 2 weeks, and so there is a specific way that you can take advantage of this new characteristic of these Greeks in the final 2 weeks. So, you could you might prefer a monthly iron condo, and there's nothing wrong with that. Your situation may be such where you don't want this high intense pace of the weeklies, and that's perfectly fine. There's nothing wrong with that at all. But don't look at weekly options as a this versus that. That's not the way you look at weekly options. Weekly options truly are a new weapon in this whole arsenal. It's a different weapon altogether. So yeah, many times, even if you do a monthly type income trade, many times you'll find that you can use the weekly options to even enhance your monthly trade. So you have to look at it as an additional weapon rather than a comparison mechanism. You might prefer the monthlies. There's nothing wrong with that. Absolutely nothing wrong with that. But in the monthlies, like I said, it has the negatives. You've got to wait for an entire month for the trade to play out. You're in the meanwhile, you just have too much time for the trade to go against you, or some kind of global event to happen, whatever. I mean, there's a lot of possibilities within that, whereas the weekly options give you a very specific, rather a very much shorter window for your trade to play out. And remember, you have weekend theta decay. So how do you take advantage of that? You can keep your trades fairly well controlled if you use these weekly options to your advantage, because you do have that weekly theta decay. So, these are very specific tactics that revolve around taking maximum advantage of weekly options, but doing it in an intelligent way, doing it in a smart way. That's the thing. What is the basic difference between weekly options and monthly options? Looking at an option chain, how do I know which ones are weekly and which ones are monthly? I know Thinkorswim specifies it, but not all. Is there a way I could figure out? No, each platform will have some way of specifying the weeklies and the monthlies. Frankly, to tell you the truth, there's really no difference. If you look at like the thing, because all you have to, the way you have to think about these weeklies are, uh, previously you had only the monthlies. I'm talking obviously, a few years ago. But even up until recently, many people did not know that these weeklies were there. So what we're looking, you just have to look at it as a different expire. You have something that expires in 5 days. You have something that expires in 12 days. You have something that expires in 19 days and 26 days and 33 days and so on and so forth. It just so happens that the one that expires in 12 days is the monthlies. But otherwise, there is no difference between the weekly options and monthly options. You don't need to know whether something is a monthly or a weekly. What you really need to know is, okay, this option is expiring in 5 days, and this series is expiring in 12 days. That's what you need to know, and that's what you're going to take advantage of, is these front weekly options. The front weekly could be the monthly. It could be. It doesn't matter. At that point, it's acting like a weekly option. When you're in the final, like this is a very good example. The August monthly has 12 days. So from this point onwards, this series is going to act like a weekly. So in that sense, there's no difference. In this program, are you going to tie in, hi Christina, in this program, are you going to tie in the day trade max with weekly options for a day trade with a weekly option in real time, or is that too specific and difficult to demonstrate? I do, in fact, I do that. I do in one of the trades. I don't use, obviously, the day trade max is a different system altogether, so I don't discuss the signals, but I very specifically say that I'm going for this trade because of the signal that we get from day trade max. So you can use day trade max, you can use your own signaling system, you can use any other chart based system that you use normally for your trades. That doesn't matter. Yes, to get your entry right, you need some kind of, especially if you're going for a directional trade. If you're going for a non-directional time decay strategy, that is not so important. But if you're taking a directional trade, long call, long put, debit spreads, then you need to have a basis for that. And whatever the basis is. In my case, of course, we'll use the day trade max signal or the swing trade max signal, but you could use any of the signals to take that. So the question, if you're asking me the question, could you tie the day trade max with the weekly options? Absolutely, absolutely. I know you have the day trade max system, so by all means, may take advantage of the day trade max and the swing trade max for your signals, and time your weekly options trade, using those signals. By all means, do that. I mean, that's a very good way to tie everything in. Okay, futures look a little bit better since we started. It's up about $4 on the S&P. I wouldn't be surprised if there's a little bounce tomorrow, because one of the things I was looking at is the charts for the S&P, and well, let's look at the spider. That's better. So if you look at the spider, it bounced in the end on Friday. It bounced back up. It went up and up, but it sort of ended right in the middle where it started. So it is at a point of indecision, I would say. Okay, which way is it going to go? We don't know, and that's why this week is critical. However, given this, what we've seen in the last 3 or 4 days, we've had three fairly big down days and one, somewhat medium update. But we've seen that after such a fall on the spiders, a little bit of a dead cat bounce may happen on Monday. However, I think bears are in control at this point. There's no question about it. Bears are in control, and the bulls have some work to do before they can take control back. Up until last week, it was, obviously the bears. I mean, the bulls have been in control over the past 1 to 2 years, if you ask me. But this is a 1 year chart, barring some correction here. I mean, we could see something like that. I mean, we have seen some pretty strong corrections. One here, one here, one here. So we could see something like that right now. So volatility is increasing, which is good. The VIX is above 17, so that's a good sign. I always like when the VIX is closer to 20. The option premiums are nice, especially if you can put call spreads way high up. Then you're taking advantage of the higher VIX there. So let's see, but this week is going to be pivotal, in my opinion. Even if there's a little bit of a bounce on Monday, what happens during the rest of the week is going to be critical. So we'll see how it plays out. All right. Any other questions? Okay, looks like there are no further questions. If you do think of any question, feel free to email me at info@optiontiger.com. Otherwise, I look forward to seeing you inside. The Weekly Max is a great product. And of course, we have the special on this week until August 10th, which is basically next Sunday. It'll be 50% off. It's $249. All right, folks. Thanks for stopping by. Hope you're having a great Sunday evening. I will speak to you all soon. If you have any questions, please email me at info@optiontiger.com. Thanks a lot. Good night.